Today I will show you how I scalped the market and made some trades. Today actually is Friday, and Friday the market is it's not always good to trade on Friday. That's why I didn't scalp much. But if I could be able to take a keen hold of my trades, I'll be able to capture around 100 pips. But since it was Friday and I didn't want to risk a lot, that's why I left my trade at this point. I entered this point, my last trade entered at this point and came at this final point here, 25 pips. Anyway, I'm going to show you how I use resistance points. You can see my resistance points are acting as supports here and here resistance, and also here resistance. These are institutional levels and also based on key resistance points on a daily chart. Anyway, I'll show you how I analyze the market. I first start with the weekly chart. If you can see the weekly chart and try to analyze it, try to make some drawings. I draw a channel. This channel helps me to identify how the market is flowing over long term. I use also resistance points, the key resistance points for the market, and also at this point there's a key resistance here. That's how I do analyze on a higher time frame. If I go to daily chart, I also do the same. You can see how from here market goes to here, then here again, following this channel. If I go to a 4-hour chart, I'm able also to see how the market is flowing. If you use Fibonacci, you'll be able to see how those levels the market reaches here at a support, at a resistance level, then goes down, then pulls back to the 79th level of the Fibonacci. And if you can use without wicks, this is how you view it, but I usually use with wicks. Now that's why the market was in a downtrend. You can see it forms a head and shoulder pattern. Remember, this is a 4-hour chart. You can see there is a form of head and shoulder. That's how a head and shoulder looks like. Basically, when you see a head and shoulder, you know that the market has reversed direction and is in a bearish bias. So that's how I obtain my bias. And this, as you can see, early morning it was here, and I anticipate the market will go down, and it has reached 127th level of the Fibonacci, and it may go on until here, but not basically for today, but some other day. And if you can magnify to 1 hour, you can see how the pattern looks. That's how I get my entries. If you draw at 1 hour, you see there is a trend line there, how the market is moving here and here, then it breaks the trend line, and also there is a chart in here that is forming. Then you go to 5 minutes. That's how the 5-minute chart looks like. And here was my first entry, was here, and this is my first entry here, but the market didn't perform well at this point, so it reversed again and I closed my trades. Sometimes the market can go this way, that's why I closed my trades sometimes earlier. Then I entered another trade and another one until I made the last entry on a sell. and I was able to move up to this region. If you go to this chart which I use for the 5 minutes, you can see I made entries based on these levels, like this one. I went for 25 pips. Basically, I had the hold up to here, but when I saw the market moving up, I just decided to close, remembering that it's Friday and I could not predict very well how the market will go on. And if I was able to hold my trade from here to here, I could have obtained more than 100 pips, my target zone was here. That's where I was targeting 90 pips, but I just closed here because it's Friday, and I just became fearful. Sometimes you take what you want from the market and try to make profits as soon as possible. But when you see profitable trades running, just hold and place your stop loss on the positive end so that you are not stopped out at a loss. So that's one of the lessons you should learn about holding profitable trades. Thank you. See you again.